Speaking of the Chinese real estate market, since 2020, when the government announced 13 red lines, the entire market's fate took a sharp downturn. In 2021, the Evergrande Group's debt crisis erupted, and in the same year in September, housing prices in 70 Chinese cities fell one after another. The decline lasted for 16 months, until January 2023, when the Chinese government decided to step in and rescue, stabilizing housing prices. Unexpectedly, the market has recently received another even more astonishing piece of news. According to an official Chinese investigation, there are currently around 600 million houses in China. As you can imagine, this news sparked intense discussion, because if you calculate based on China's 1.4 billion population, an average of one house is owned by every 2 to 3 people. This number led people to start questioning whether the supply of houses in China far exceeds the demand, and if it implies that an era of plummeting housing prices is imminent. Before analyzing this issue, let's take a closer look at this data. China's Ministry of Housing and Urban-Rural Development spent 3 years, mobilizing more than 2.6 million people, conducting a census on housing construction and municipal facilities nationwide. The results were released in 2023. The report shows that there are over 600 million buildings in China in total. In comparison, China currently has only around 500 million households, averaging more than one building per household. Therefore, after the release of this figure, many people were surprised, realizing that they were a minority who could not afford a house. After a closer look at the data, we can find that the so-called 600 million buildings are just the total number. If we look at the distribution by location, rural houses account for more than 90% of them, while urban houses actually only number over 47 million. If we further exclude non-residential units, the actual number of habitable houses is even less. In other words, before discussing whether there is a surplus of houses, we must look at this issue from both rural and urban perspectives, and the conclusions for the two are vastly different. Let's first look at rural areas. As mentioned earlier, about 90% of China's total number of buildings are concentrated in rural areas, but the country's rural population is only 500 million people, accounting for less than 40% of the total population. This translates to an average of more than one house per rural inhabitant, which is clearly higher than the normal supply and demand situation. At the same time, we must also consider that the rural population tends to move to cities, so the future demand for houses may continue to decline. In this context, there is indeed an oversupply of housing in rural China. The houses in some small towns and villages in the future might become extremely cheap, and even fail to find buyers. In fact, this situation has already appeared. The most famous recent example is Hulunbuir in the northeastern province of Heilongjiang. In 2019, there were reports of second-hand houses being auctioned off at a very low price in Hulunbuir. According to information published by the media at the time, a second-hand house in Hulunbuir city could be purchased for just tens of thousands of Chinese yuan. The reason behind this lies in the development context of Hulunbuir. In the early days, Hulunbuir was rich in coal resources, which led to a prosperous settlement at the time. But after the coal resources were exhausted, the area quickly declined. Hulunbuir has since become a shrinking city. The permanent population of this land has been lower than the registered population for many years, and the population continues to flow out. As the local demand for housing continues to decline, the local housing market naturally becomes stagnant. Chinese real estate experts generally worry, many small towns in the country will eventually follow the footsteps of Hulunbuir. Among them, the progress of the northeast and northwest regions is the most worrying. Next, let's look at the towns. There are about 900 million people living in urban areas in China, which is more than 300 million households. And the existing number of urban houses is also more than 300 million, the ratio of the two is close to 1 to 1. So, if we look at it from the perspective of housing per household, there is an average of one housing unit per household in China. Supply and demand are in a balanced state. However, considering the continuous increase in per capita income in China, more and more new families want to buy property in big cities. The tight supply situation in first-tier cities, in the short term, it is unlikely to change significantly. Let's stop here for the interpretation of the data at the beginning. Now, let's draw a simple conclusion. According to the authorities, the total number of buildings in China is indeed 600 million. But the vast majority are located in rural areas. In the future, with declining demand, rural housing prices may indeed become extremely cheap. As for the towns, the current balance between the number of households and housing units. But the more premium the area, the higher the demand. Therefore, the housing prices in some local areas, it may be very difficult to lower. The above is a regional analysis of data, but if you want to look at the overall situation, the general trend of China's future housing prices, we have organized the views of various institutions and experts here, which can be divided into two camps, bullish and bearish. The bullish camp believes that, if we look at the official data for 2020, China's per capita housing area is about 41 square meters, among them, rural units account for 47 square meters, and cities account for 35.7 square meters. If we compare this figure with other countries, the average housing area in the United States is 52 square meters, the United Kingdom also has 40 square meters. In comparison, China's urban housing area still has room for improvement. In fact, Chinese urban residents are mainly small families. As children grow into adults, they tend to not live with their parents. The process of generational change and the housing demand generated by leaving home will drive the growth of China's housing market in the future. This group also puts forth another argument, which is the innate replacement demand for housing. According to statistics, nearly half of urban households in China live in old houses built before 2000, with ages often exceeding 20 or 30 years. These houses will be reconstructed in the future. If the government wants to promote the development of the housing market, it only needs to re-implement relocation subsidies. At that time, these old house owners will actively inject construction into the housing market. There are also many supporters of the bearish view. This group believes that the current vacancy rate of housing in first-tier cities in China is about 17%, while it is more than 20% in second- and third-tier cities, higher than the global standard. Looking at the home ownership rate, both urban and rural areas in China are currently over 90%, also higher than the world average. In fact, a large majority of families in China own their own properties, but the housing control rate remains high. This leads to a market driven by rigid demand, which is difficult to maintain at a high level. As for the reasons for housing control, besides low rental returns, or high thresholds for buying a house, an important factor is the aging population. Behind the aging population, China's population experienced negative growth for the first time in 2022. Therefore, many research institutions believe that the era of large-scale development in China's real estate market has ended, and future housing demand will enter a contraction period, making it difficult to see the past prosperity of buying and rising prices at will. We have summarized the two perspectives for your reference. Whether the future of China's housing market is an opportunity or a risk depends on how you interpret it. For those who have actually operated Chinese real estate, they may form their own understanding. Some friends around me think that housing oversupply and control rate are old topics and will not have much impact on short-term market performance. Indeed, there is still a dominant factor in the ups and downs of China's real estate market, which is the government's regulatory strategy. China's real estate investment accounts for a much higher proportion of the overall economy than it does in OECD countries. For the government, real estate is both the locomotive of economic growth and a potential minefield leading to collapse. Therefore, it is necessary to keep the industry trends firmly under control. In the past, during the 2008 financial crisis, the Chinese government used policies to stimulate a rise in real estate. In 2016, they again promoted real estate, causing a rise in overall property prices and volume. This year's strong housing market attracted countless Chinese people to take out mortgages, but it also had a negative impact on their actual wealth composition. Research institutions have found that real estate accounts for up to 70% of Chinese household assets, while cash only accounts for 10%. This makes their purchasing power far lower than their book value assets. Coupled with the rapid development of large and small construction firms, a debt crisis was born. The Chinese government eventually decided to use 3 red lines to rectify housing enterprises, causing local housing markets to fall into a trough. It was not until 2022 that the authorities decided to relax the preconditions, promoting local housing loan preferential policies. What is noteworthy is that the Beijing authorities have grasped a key point in this wave of loosening, which is the principle of housing for living, not for speculation. From this, it can be seen that what the Chinese government wants to see next is probably not a soaring housing market, but a more stable development. However, who can predict the future accurately? Perhaps in 2024, something significant will happen, forcing the authorities to stimulate the housing market to boost the economy. As for the direction in which all this will develop, let's continue to observe. Well, that's it for this episode. For those interested in this topic, feel free to leave a comment below and discuss your thoughts. If you like our channel, remember to subscribe, like, and share. See you in the next episode. Goodbye.